Hey guys, welcome to Make Money Count. It has been a very long time since I've been on the podcast. I personally thought that I was going to be replaced forever, but it sounds like that's not the case. So I am very excited to be here. Marcus is not in the podcast studio with me, but he is in a secret location, streaming live, which is exciting.
Oh my God, you're so clear. I love this new software that Matt's got. Like, you're like, yeah, like I can see right into those beautiful blue eyes of yours.
I was actually saying to Matt that I look like a little bit of an uglier and like chubbier Steve Carell, maybe like in The Office.
Way
just
more
with the
handsome than Steve Carell. Yeah,
Oh,
no, seriously, look at those piercing blue eyes. Look at those baby blues. Unstoppable.
Oh man. Okay. Well, I'm excited to be here. Like I said, today we are just going to talk a little bit about, we were speaking earlier. We were speaking yesterday, sorry. And we were chatting about how crazy it is that, other mortgage agents, other mortgage brokerages choose to send their files to us because of the complicated rate environment that we're in.
I don't think it's that crazy.
And anyways,
I don't think it's that crazy.
I don't think it's that crazy either. I just made it like I was embellishing for the podcast, but it makes sense to me. Why they do. But
times get tough like this, and underwriting gets more difficult to deal with, and customer files that should be approved easily start. Like there's more questions around it. It's going to take more to get a file done.
Yeah.
It's going to take more than just, throwing it into a lender. And you can see it like we're in a cycle, right? And part of this cycle, like as we head into a more recessionary environment, is that banks tighten. And when banks tighten, they don't want to do business with just anybody. They pick a few good brokerages that do a lot of business with them, and they focus on working with them. So that's why you're seeing right now a lot of mortgage brokers that either don't do a lot of business or maybe aren't as experienced are calling us to send us their files to work on for them. And we're getting them approved for them.
Yes. Yeah, absolutely. I mean, it's I remember so much in the past speaking to people and having like hearing that same old story. Well, like, my cousin or my uncle just got a mortgage broker's license and they got everything figured out. We appreciate it. And that's just not cutting it anymore. You know what I mean? It's not cutting it.
This is a worrying time for consumers, and it highlights the importance of working with, a broker or a lender you can trust and you can rely on. Because it's always going to be easy to get expensive private money. What's difficult is to find that, to ensure that when you are doing a deal, you are getting the absolute lowest cost of capital. Not only that, sometimes it's more complicated, right? Sometimes getting the lowest cost of capital involves getting a deal and then moving into another deal, right? Like fixing up whatever's deficient in a file. And that's not always the kind of the deal that makes the most sense, let's say, for the mortgage broker, right? A mortgage broker won't make as much money, won't be as much to their benefit. And that's why you need to find a broker or a lender that you can trust and you can work with, right? Like I see in our files right now, when I'm going through looking at what the offices are doing, I see so many files where we've got a borrower that we're giving a borrower 25, 50, 100, $200,000 for a 3 to 6 month term to fix something that's deficient so that we can get them back in with an A lender. Nobody's doing that, right?
Yeah.
So many really, really complicated files where a person might own multiple properties and they've had a great relationship with their bank for a long time. And now they're finding out that relationship maybe it wasn't as strong as they thought it was. And,
Right.
I sent an article to Matt earlier that CIBC has increased their provision for credit losses, and it's affecting their profitability. Here's why it's going to get more difficult to do a mortgage in Canada. And here's why you're going to start getting more phone calls from other mortgage brokers. Or what's even worse is like when you get a call from a client who kind of thought that they had it all nailed in and it wasn't all nailed in. And here's why. The banks are starting to come out with their quarterly earnings numbers. CIBC just reported, and they're down like, $300 million over last year's quarter. Okay. It's like 20% drop in profitability. Yeah. So, and the reason for that is their provision for credit losses. So they're saying to the market, we're really concerned about the quality of the loans in our book, and we believe we're going to see losses. When that starts happening, their origination slows down because heads are going to start to roll, right? Like, oh, who is responsible for putting those loans on our book that are now in default, that we now have to affect how we report to our shareholders, right? Like, make no mistake, there's nothing more important to the chairman and CEO and C-suite executives at any bank than what they have to say to their shareholders. And CIBC coming out and saying we're going to be down 20% year over year in our profitability because we have a bunch of bad loans on our books. That's telling the market something. And every kind of stakeholder, every single person is a stakeholder within the Canadian bank's ecosystem, right? Whether they have your savings or you're borrowing or you're a shareholder or like us, you send them business. These are all stakeholders. And anytime that the bank reports any bank reports their quarterly numbers, everybody should be interested because it's going to affect how they deal with us. And I can tell you from Cannect's perspective right now, it means two things. Number one, underwriting is going to get tougher. And if you have a great relationship with the bank, now is when it's worth it. And I can tell you, number two is there's going to be a lot more clients looking for private money because they're finding themselves displaced now within the banking ecosystem. Anyways, that's like, Justin, like when you call me and you're like, man, we're getting a lot of files from mortgage brokers. It's kind of like, it's very similar to the situation when, like, right now, there's not a lot of mix lending money because a lot of them got burnt by over lending when property values were 15% higher than what they are right now. Right. So it's when the tide goes out, you figure out who's wearing a bathing suit. That's what, like, isn't that what they say? Matt, what do they say? What is that weird saying? Like,
that's really funny. I've never heard that before.
Yeah. Like when the tide goes out, or maybe when the tide comes in, you find out who can swim. I don't know. Regardless,
I like the bathing suit one way better.
Regardless, sure. Like, it happened in the lending space where now we're able to lend money because we were lending prudently over the last, 10 years. And now it's happening in the mortgage broker space because deals are becoming more complicated. And because those deals are more complicated, fewer people at the banks are going to approve them, and fewer brokers can carry them into the banks to get those approvals.
I mean, yeah, like, listen, the other thing that I think about often too is that, brokers will usually just travel down the path of least resistance. You were mentioning earlier about, like, we've been doing a lot of, fixing up a situation lately, giving people 20, 30, 40, 50, 100 grand, cheap to fix their situation for a short term, so that we can get them, on a better path. Most brokers don't think like that. Like, most brokers and agents don't think like that. They just look at the deal and they're like, well, I can't figure it out. This doesn't work to me. So, they need an outside person to take a look at it. Right. And, sometimes it's hard for the clients to see that too, just because, when we offer these solutions, they don't realize that, they got to walk up the hill to get to the top of the hill, right? Like it, it might be a little bit, a different approach.
Do you have any advice? Like when you have clients calling you now to work through a deal and it's complicated, like what's the first bit of advice you would hand somebody, right? Like people are like, a lot of the people that I can see that are coming to us have been declined now, and they think that they shouldn't have been declined. Like, how do you handle that?
I mean, that's been happening for centuries, just because, depending on the borrower, they usually think a little bit different of than how the actual mortgage industry works, right? But I usually just tell clients, like, just, you know what I mean? Let me take a look at your file. We have one of the best underwriting teams out there, right? Let me look at your file. Let me take a look over it. I'll show you why maybe you were declined at your bank. And in the same breath, I'll show you exactly how we can, kind of get this done for you.
It's funny. I think that like one of the hurdles that we have to deal with is always going to be trust. Right?
Yes, exactly.
It's because these poor clients have and again, I think like it comes back to like how good natured Canadians are, right? Like they put their trust into their bank. I don't know whether this will ever change. One of the biggest barriers we're always going to have when we're dealing with clients is to rebuild trust, because I don't know whether it's a Canadian thing, right? Like we're very kind of trusting, and good natured. So Canadians will start working with a bank and they'll find out that like they can't get what they want done.
Right.
What they thought that they could get done, what makes sense.
Yeah.
They should be able to get done. And then they'll come to us. And the first hurdle is always like, well, how are you going to be able to help me when my bank wasn't able to help me? Right. What are you going to be able to do for me? And I think that the first thing that we need to be able to convey to them is that their bank isn't built to solve their problems. Their bank is built to solve the bank's problems. And the bank's problem right now is that they can't lose money on loans that go bad, or else they're going to have hell to pay. And the people within the bank are all behaving like that right now. So, and it's going to get worse, right? So I think that if the better we can convey that to clients, and we're not going to be able to service everybody that is now feeling that their bank has turned their back on them. So find a good mortgage broker. If it's a mortgage broker that's attached to a lender, like Cannect is, right? Like a vertically integrated platform where we can source low-cost capital to help clients in short periods of time, then you are off to the races, right? Like you're going to get what you need out of Cannect or out of a similar organization.
Yeah. When it comes to that particular thing, I always tell my clients, when you go to your bank, you are a person, you're going to one place, you're going to your bank. That bank has a particularly sized box. It has a particular box that you need to fit in. And if you don't fit inside that box, then you're screwed, right? And in this market, people's, rates are getting bigger or higher. Rates are getting higher. People's problems are getting bigger. And less people are fitting in that box, right? The box isn't getting any roomier. I think I said this to you earlier. The box isn't getting roomier at the bank, right? So, going to someone who has every sized box you can imagine, that's how you're going to get your problem solved.